All right, mate. So we have a meeting, Fed meeting on Friday, Friday 10 a.m. as far as I can make out, just from a quick Google. But yeah, what's my thoughts on the crypto outlook in the perspective of traditional market rejection? Well, it's obviously not great for crypto. There is nothing bullish about this reversal until proven otherwise. Like you can see here, when you get this rejection, price does go lower, but it fails to continue and hold lower and starts working its way back up. When this high was taken out, all bets were off for the bear market. Like people were calling for a top in the market here with this bad rejection. I remember it. And but as soon as price gets above this level, well, the rejection is done. There was not enough sellers in the market to bring it lower. So we have a similar situation right here. The market needs to, well, for the bears, the market needs to prove itself, and we need to obviously, continue lower and do not break above the highs of this candle. Right, that's where we're at. A little bit like what happened here. Right, we do in the initial market action and the market action afterwards, you do want to break out above the highs of this here, and then the bears are still in control. So at this point we have a high, we have a major high in the market, and below this is technically bearish. If we get above this green line, there is a case to be made that this is bullish. So let's look into this a little bit deeper. If I go to a weekly chart, we can see as well where we rejected here. Now this is it's a very important rejection area actually. Not only did it reject the price this time, and we called this in the group the day it happened, and right before the market opened, we called for this 2-week the stop on the bearish rejection here and for it to roll over. So we were absolutely spot on, and to be careful. Now you can see there that the white moving average where we rejected. If we do go back here, you can see that this bounced back up. Well, wasn't identical, but you can see here in 2008 we did kind of reject off that and drop lower as well. No, it's not it's not perfect. I think what I was more looking at was in the S&P 500. Well, this did pierce above it here, right? We did pierce above it, but if you look back in the financial crisis, look where we rejected. Very similar to what the Nasdaq is doing right now. We pierced above that and we continue to roll away. Now when you break below all of these moving averages, right, that's very dangerous, right? If we reject and continue to roll over and break below the moving averages, it's very, very dangerous. Now let's look back here as well. Taking a little bit slow to load there, but you can see as well, look at this. Once we rejected, we came down, rejected off this white moving average right here. Well, it pushed the price down, and eventually we got below all moving averages down here. Yes, we got down the first time, but the second time was a rejection, and once you got below that again, price got stuck below all moving averages and pushed the price lower. So if we go back here, you can see right now, well, we are rejecting. Right, and this is the S&P 500, and we are getting pushed lower. Again, the market is bearish below this signal right here. Now there is a few things to note. There is an important gap. You can see a gap, an important gap right in here. Sometimes the price likes to bounce and fill that gap. So is the Fed going to bounce the market and fill this gap, or are we going to do this later? So it doesn't look great to get filled right now. It's a pretty bad rejection. If I just switch this to a monthly chart, you can see that there's this candle right here that we're forming now. It's a rejection candle right there. Now if you actually look lower, I tried to fit it all onto the screen here, but you can see that we had the exact same candle here, right there at the moving averages, the exact same candle, and next month was a red month, and then we dropped lower. Okay, so that's going to be very important coming into next month. Most of the drop for me is already done this month. I don't think we need to worry too much about this month. Look right back here. We had the exact same big green candle up, then a rejection, then it was the next month that rejected and we had a red month back down. So we have the similar situation right here. It is next month that we need to be worried about, in my opinion. Most of the move down is probably already done for this month. It is the 24th today. So I would imagine there's probably going to be a more chop coming into this Fed meeting, and I don't anticipate the Fed to crash the market yet. So as we can see in the past, in the history, the market was unlikely to flip red on this candle. Now, could we flip red? Of course we could. We definitely could, but we have to understand that the market has already fell well, 5%. It's not huge, but it has dropped. It is now down into the monthly open after a large rejection. So, you know, technically it is into a bit of a level of support. As we can see here on the Nasdaq, this has also dropped down and we're just about to flip red, right? So I think most of the move is done for this month. So before I move on to crypto here, you can see when we got these rejections, when price was kind of stuck underneath these moving averages on a monthly chart, right? You can see here, and now we're doing the same thing here, trying to do the same thing here, getting stuck underneath the monthly moving averages. Well, we can kind of see what Ethereum is doing right here. Ethereum is kind of doing something very similar, and we are getting that same rejection. Now we do have the merge coming up in many weeks time, 3 weeks time, I think. There's no question about it. This is an important rejection. You know, I am bullish coming into the merge, at least as we get closer to the merge, and I think the markets can bounce coming into that. Markets usually have some sort of bounce coming into it, but it's likely to be a sell the event type of situation where we've got the bullishness coming up into it. And there probably will be one more decent bounce coming into it, but that obviously depends where we are. But as you can see, you know, it's never a good sign to be kind of rejecting like this. That's a decent move up. I mean, Ethereum bounced 100% or whatever it bounced, 125%. So it's a good move up, and you can see how easily it is to kind of fall away again. We technically are still below all of these moving averages, so Ethereum needs some work. I think an important factor for Ethereum as well is, you know, we are back into this sort of neckline area right here, and that is a resistance point. There's no question about that. This is resistance. Now, if I zoom out to the weekly, a couple of things to note. Now, my prediction for Ethereum was that it's going to bottom out here. If you remember, you know, I made videos about it and posting and show my my prediction for Bitcoin and Ethereum, and it was that we would bottom out here below this moving average. Now, we were up here somewhere when I made the prediction, or in this block here, I think it was. But my prediction on Ethereum was that we would bottom out here, bounce up into this sort of area, come back down, and potentially stop on this level, or come back down for a double bottom, and then move back up off here, and move up, and then well, there's a potential prediction of $10,000, $10,000 to $15,000. For me, this is a critical level. Now again, I just want to show something here. You can see that there is a gap in this volume, right? If I put that there, now the whole gap does not have to fill, but I would suggest that some of this gap will fill, right? So if we come back down, if I move this here to a double bottom, right? If we come down and pierce below that and come down and make some sort of pattern, you can see that a lot of this volume is actually going to be filled out. We're going to have more volume here, and that volume gap will mostly be gone. Now you can see that maybe I should move that down to here, and maybe we're going to come down to about there, right? And where is that? That's $763 to fill out this volume gap. Okay, this can often act like a magnet. So if you can see right here, this can often act like a magnet in price, because there's a gap in the volume, and it's almost like when a stock gaps up, price likes to come back, and it acts like a magnet. At some point in the future, that gap will fill, because the gap in price is often a gap in volume also. Well, it is a gap in volume, but it also depends on how much volume had been traded at that level also. For example, we could have a lot of volume here, but if price gapped up here, okay, there still might be a lot of volume here, which means there's not much of a volume gap, but there's a gap in price. Okay, but this level right here, as you can see, coming back right over here, right into here, there was no volume traded at this level. Right in here, there was not much volume traded here, and so that is technically a bit of a gap. So my prediction for Ethereum was that Ethereum eventually rolls back over down to fill this gap somewhere, and we bottom out somewhere here. Right, this was the first bottom that I called, and then we move up and come back down to retest the lows. I still stand by that. Now, another thing I want to point out here is that if I just zoom out a little bit, if you look at the RSI, right, if we look at the RSI here, you can see that the entire when price is above this 50, it moves up into a bull market, and you can see this entire space here was in a bull market. Right, and we drop below it here, and this bounce here was a bearish retest, and then we rolled away. You can see we got a bearish bounce here, this was a bearish bounce, and we rolled away. Right, now all of this down here below was still in a bear market. Right, this was still in a bear market. Even all of this here was in a bear market. Right, all of this here was still technically in a bear market. We are still below here, right? This, in theory, is still technically a bear market. Okay, now if I clean that up a little bit, you can see that when we went into a bull market on Ethereum, right? Well, you can see that we broke out here. This was a breakout here, and it was a failure, and we fell back below it. But when we broke out here, the price was still extremely low. Look at this. The price was still down here, extremely low on price, just coming off the very, very lows. And from this point here, Ethereum was above the 50 on the weekly RSI, and we moved into a bull market. Right, you could have bought Ethereum right here based on this RSI and sat and held and made millions of dollars. Okay, just based on that alone, if you understand how to read the RSI. Now, we are still technically bearish below the 50 RSI. On the weekly Ethereum chart. This still tells us that there is potential for well, some sort of rollover or some sort of rejection to stay below here. I mean, the price has now bounced 100 and something percent, 125%, and this RSI is still bearish. Technically, that's a bearish sign, or technically that's saying that it's not a bull market, is what it's saying. Doesn't mean it's bearish, but it means that it's not strong enough, and it's not a bull market sign. So I think it's important to focus on Ethereum here going into the merge. It has been leading the market, and it's important to look at the market leaders. Also, technically, I know this it's a long way up, but Ethereum is bearish below this line technically in a way. I know that's not the greatest indicator, but if we start to break out above that, you can be a lot more bullish on Ethereum, I suppose. I mean, but it has to conclusively break it. There is a chance it comes back for a test or something like that and fails. But a very important thing to note here, and a lot of people may not understand this, is that we have created a high here on Ethereum. This is a lower high. This is technically a lower high on Ethereum. There is no taking out the previous high. Like you can see right here, this took out the previous high. We are not taking out previous highs or changing in trend. This technically can be counted as a bear flag, so to speak. Now, it can change, but if you look at this, it's not doing anything. Like what we could do, we could drop down, and then maybe we could double bottom, and then this would become more of a valid pattern if we break out and break off from there, because we would have a bit of a double bottom, and then price, if we break out here, then there's a case to be more bullish. But the structure as it is not very bullish. It basically means Ethereum has a lot of work to do if it is going to turn into a bull market again. Now, one way around that is, if we continue to chop in this area and build out a big base, okay, or something like that. The moving averages will, they'll form and come up, and we'll create some sort of base. Then we could break out of this and move higher. That is a possibility. Yeah, I know there's a long video, but I'll just quickly talk about Bitcoin here and wrap it up. So this point right here, you can see that there's a bit of a rejection here and dropping back down inside this large kind of red candle. There is an element to say that it kind of has similarities to this. You can see the large red candle, we get the green bar back up, the large red candle, the green bar back up, and then you get this rejection candle down, okay? And then you can see what happened after that. The next month was also down further, and we kind of filled out a bit of a bottoming process. And we all know what led to that. You know, it took 3, 4, 5 months after that. Well, the drop 2, 3, 4, 5, 6 months to the drop down, then we based. So that's an interesting situation. Are we forming something similar here? You know, the drop down and a bit of a bear sort of pattern here. It was a bit of a triangle. You know, are we going to build out another triangle here to then drop lower? Now I'm saying that because look at the volume here. Look at this volume right here, and I could easily put another magnet here and put that there. There is a gap in that volume, right? There is also a gap here in that volume. Let's put that there. So you can see that there's a huge gap in volume. Now it doesn't have to fill that volume, right? It doesn't have to fill that volume, but that volume right down here should be support, because there's a lot of traded volume down here, and at the moment we don't have a lot of traded volume here. I mean, it's okay volume, but it's not what it was back here. Now we all know that Bitcoin loves to create triangles, and if you look at this could be forming another triangle. Like very quickly, I'll just draw a few of the past triangles. Of course, you know, we had one in here. You could draw that there, and then we broke out of it there. We have a large triangle right here, you know, that kind of broke down here. We had this triangle here. If you remember, at $6,000, we had a triangle that broke down there. You know, there's obviously many smaller triangles along the way also. But is this forming some sort of a triangle here for the one last drop on Bitcoin? Technically now, we are bearish. Bitcoin is overall bearish until we take out $24,000, $24,400 and what is that? I can't read it. 24,500, we'll call that. So it's saying that bounces should sell off below this level. Okay. If we break above that level, well, we need to be thinking differently. That there is something else happening. Two things just to wrap this video up. There is a measured move target. If you take that high and move it down to here, you can see where that takes you, right? This measured move right here takes you exactly to the volume profile, right? It takes you down to the volume gap. That is very interesting. Now, as you know as well, I had this was my bottoming place for Bitcoin, okay? And what I said was that we were up here as well when I was saying about this. Let's move that back up here. You can see how actually, let's just move both of them. Okay, we can have that there as well. That's the target. But when we were up here, you know, I said that Bitcoin should drop to here. We should get a reaction and a bounce off this, come up to the well above the red 200, I thought, but it didn't get there, and then come back down to stop on the lows, and then move off from there. That's the way I had it playing out. Okay, so there is a lot of confluence down here at this $12,000 level. Now, Bitcoin is no different than Ethereum. You can see that the RSI here, the bull markets had all been up here, right? We have been above here all the time. Below this 50 have been bear markets, right? Look at this, right down to here. If you look right to here, that was a bear market right to here. And as soon as we flipped the 50 level right here, that was into a bull market, right? And we moved up into a bull market. Again, mostly we held above it here, showing better signs of strength. Look where the RSI is right now. Look where the RSI is. It's not very pretty. It's not very good. But we are, right, we are down into an oversold territory, right? The market is trying to find a bottom. I think we're in the process of finding a bottom. You know, if we get one more flush, I think it's an amazing buy. You can see last time when we went sideways here, right? We went sideways on the RSI, and then we went sideways and created a large pattern like this. If we continue to range, like what I said about Ethereum, if we continue to stay in this range for a longer period of time, there is a better chance for the market to break back up, just like it did back here. I am not too sure if we can hit this, but on a 2-week chart, we have the red 200 moving average right down here with confluence down and around that $12,000 to $13,000 level. That's very important. The last time we got a rejection like this was probably at COVID, right? You can see that rejection there that engulfed the previous candle, or more than previous 1 or 2 candles. See it engulfed, this red candle engulfed the 1 or 2 candles. Then the next week crashed, okay? And you can see here, we've engulfed the previous 2 candles. Are we going to get a similar crash in the next 2 weeks on Bitcoin? I am not sure, but I definitely will be on guard if we start showing bearish signs into a new 2-week candle. That will also be a new monthly candle on Bitcoin. So it will be very important to watch the Fed meeting this Friday and see how the market reacts.